Things are getting very quiet when it comes to Bitcoin, cryptocurrency. Nobody wants to watch videos like this, so if you are watching this, you're probably the minority. Why this is important is because we've seen the exact same thing happen 4 years ago. So what I want to show to you in this video is exactly why the period of accumulation is right now. And I'm starting to buy up, and I'm going to share with you what my reasoning is. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. When things get quiet, that's when I get really loud. And the reason I do that is because I want people like yourself that spend time here trying to get some value to actually grow with me. I want you to grow as well as I do for everyone else around me. So if you are interested in more daily updates, there's a Patreon link in the description below. Join the mastermind. I'm in there every day, whether it's talking about trading cards and what you can do in the short-term arbitrage, as well as going out there, building wealth in crypto, and what my thoughts are on a daily basis when it comes to Australian real estate. Now, we all know that crypto has potential in the future, and we're sort of going, yeah, at some point it's going to return, but when, I don't know, and I'm being impatient, so I'm going to look elsewhere. This is the same level of thinking that got me to stay out of the market in 2019. I bought in 2018 and then I got destroyed, and I thought,
okay, well, you know what? It's probably never going to come back. It's dead. Basically, I'm going to walk away.
And what I did, only to return a couple of years later, and the price was 3-4x the price that I could have purchased if I had stuck around. So I'm hoping you stick all the way through this video because I'm going to share with you exactly what I'm buying, how I'm doing it, and I'm going to set something up with you which is called auto invest, but more on that later. Now, we know that there's traditional ways to buy crypto. You go on an exchange, you put some money in and then be able to purchase it. But what I want to know is, how do I set up an auto investing plan where it can do it in the background and DCA, which is dollar cost averaging? Now, you may have heard of dollar cost averaging, but let's just see the power of dollar cost averaging, especially when you come to something as volatile as crypto. Because unlike other markets where you might have fluctuations in the short term, you can pretty much weather the storm because nobody's really talking about it. And what's a couple of percent up and down? You're bored. Okay, you're going to move forward and you continue with life. Whereas with crypto, every time there's a 20% move or a 30% move, that's a pretty average week in crypto. But it means that the clickbait articles that come around forces you to come back in. And that is when you're starting to get emotions attached with your logic and you can't think properly. So you're probably selling at the wrong time, buying at the wrong time, and it's a complete mess. So let me show you exactly what dollar cost averaging could mean for you if you had started a few years ago. Now on this site, what we're able to do is actually see if we dollar cost average during a period of time in any of these assets, what that would look like. So let's say 2 years ago, we started putting $100 weekly into this asset class. What would that actually look like? What you can see here is that you would have put in 11,800 in total, and the result would be 8,922, which doesn't sound great given the fact that we've just had a big retracement. But where it gets really interesting is when you can go out there and be in the market long term. If you had just started a year before that, what would that actually look like? Well, in this case, you would have purchased $17,000 worth of Bitcoin, and that would now be worth $27,461, which is a 26% return. Now, a 26% return over the period of 3 years doesn't sound so substantial, but it meant that you were doing this in the background. Now, in the same period of 3 years, yet the value of our currency dropped even further than that. So this is quite impressive, and it gets even better when you start looking at other assets. Now, Bitcoin being the safest because it's the largest in crypto and is the first crypto really, when you start going down the risk curve, you can see what sort of gains you can actually make. If I was to just change this to Ethereum, what would this actually look like? Well, in this case, if I put in $100 for the last 3 years, every single week, that would be worth $17,000. However, the value today would be $53,342, which is a 213% return. And again, if you looked further down the risk curve and you say, went with something like Cardano, that would then mean that you put in, again, the 17,000, but it would be worth 64,000 today, which is a 276% return. The main point I'm trying to make here is that time in the market is very important, especially when you're dealing with something as volatile as crypto. Now, we know past data is not a good representation of what happens next, but if we can understand these cycles and be around when no one else is around, you're most likely picking up assets that are underpriced in the long term. If you truly believe in what's happening in this space, you probably want to pay attention. Now, as I mentioned before, I purchased my crypto in Australia through Binance Australia. I'll leave a video up here so you can check out exactly how to get set up with Binance Australia. But what I want to show you on their platform that is very cool and is the way that you should probably set yourself up if you're looking at doing this this long term. So if you come through to the menu and you go to auto invest, it's accumulating crypto on autopilot. Who doesn't love that? Autopilot's great. So you create your own auto investment plan. And in this case, you start by creating your own investment plan by picking coins that you would like to invest in to decide your investment amount and schedule a recurring amount. You can then take it a step further by actually earning passive income through Binance Earn as well. Now, you've got two ways to set this up. Now you can go in individually, go into say something like Bitcoin and create a plan. If I was to go here, it says when I would like to start auto investing, how much I would like to auto invest. And in this case, I'm holding some USD, and I could then create a recurring cycle, which means I could do this daily, weekly, bi-weekly, or if you want to get real fancy, you could do it every 12 hours. And then you'll be able to repeat that purchase. And in this case, if I was to put 100, if I was to put 1,000, depending on what your strategy is, how much you can afford to put in, I would then be able to set this up and then confirm. And I don't want to set one up for like 10 different coins. I can go ahead and create a portfolio auto invest. And this is really cool because I can go here and add some coins. So if I say BTC, ETH, Solana, and Harmony One, I can then go ahead and say confirm. Now, what this allows me to do is I can allocate a percentage of my portfolio that gets bought up every time. So for instance, if I want to buy $1,000 worth of all of these cryptos, I can say that I want to put in 20% into Bitcoin, I want to put 20% into Ethereum, I want to put 20% into Solana, and then I want to put 40% into Harmony One. Now we've allocated the entire 100%. Now I'm not saying these are the percentages I would be using, but this is something that you could use for yourself. Again, go through the same process, use the stable coin that you have on here, and then be able to figure out exactly when to purchase, how often to purchase, and click confirm. This allows you to do this on autopilot. That's the whole point of this. If you do join with the link in the description below, you'll get up to $100 worth of USD cashback vouchers. So definitely get started today because you can take advantage of the fact that you can start investing now when everyone's quiet. And in addition to that, you can start earning that passive income through Binance Earn as well. I cover Binance Earn in a little bit more detail in this video, so definitely go check it out. Now, if you were to look at some of the rates that you would get through Simple Earn, which is Binance Earn, you could go ahead and see Cardano is giving 11.29% every year. You've got stable coins at 8%, and that's flexible. So that means I can go in and put it for 1 month, I can put it for 12 months. It's flexible. Whereas with the Cardano rate, it's at 90 days. I can get that. But if I did 60 days, it drops. There's over 200 cryptos that you can put in and earn some passive income. This is why I like Binance Australia, because you can do everything in the same platform. There's also some trading stuff that you can do with Binance Australia. So if you are interested in that video, comment down below trade with Ravi, and I'll make that video for you guys. So we've covered off what dollar cost averaging into the market looks like, what it could have looked like if we did it for the last 3 years. Could it potentially play out that way, if not better? Possibly. But then we've also gone ahead and figured out how do we actually execute that today in today's plan. And we've done that through Binance Australia. Now what I want to show you is exactly why I'm starting to get a bit more positive around the fact that we've been in this bear market for a while and why it's about time that this bear market's about to end. So I'm actually using Into the Cryptoverse, which is Benjamin Cohen's actual premium group. So you should definitely go check it out. He's got a fantastic channel on YouTube as well. It's a paid platform, but I'm happy to pay if it outsources some of this research that I don't have to do myself. Now what I've got here is a couple of bottoming indicators that he's got as part of his platform. And what they're starting to flash is probably close to the bottom, if not already there. And over here, what we can see is every time we've had capitulation or we've had the bear market lows in a market, we have gone below 0.4. And we've seen it again here in 2015. We saw it in 2018, and it did briefly go down there a couple of months ago. So according to this, we've already bottomed and we're probably on the way up. Now the price hasn't been suggesting that, but that's where we can use some of the other charts to tell us a story. Now this is quite interesting because this is a return on investment from the peak of the cycle. We can see the blue one, which was the first cycle. We can go ahead and see the red one, which was the second cycle. And then we can see peak 3, which is the orange one. And that is the one where it was 2018. That's the one that we're most familiar with. Now here, what we've got is the green one, and that is the current market. Now, what we can see is on all 3 occasions, we had seen some sort of capitulation towards the end. In terms of days in this bear market, we're tracking very similarly to the last 2 cycles. And what that means is that we could potentially have another leg down, but in terms of time, it could be anywhere between 60 and 90 days. On this chart, which is Bitcoin percentage of supply and profit and loss, again, suggests that once these lines start meeting up, we've probably got about 3 to 6 months left to go before the bear market lows are done. We can clearly see this in the 2015 cycle. However, it was smaller in the 2018 cycle. So could we spend maybe 3 months? Well, then that would put it closer to the 2018 cycle versus the 2015 one. And this is the final graph that I'll show you, which is the BTC market value in realized value ratio. And what we can see is every time it's come below 1 is usually where the bear market low actually is. And we've seen it in 2015, we saw it in 2018, and we briefly saw it touch in 2020 during the pandemic crash. Now what we've got is us sitting there very close to the bottom. And again, the timelines are matching out quite quite well. In my opinion, over the last 6 to 9 months, I've been suggesting that Q4 of 2022 is most likely when we're going to see the bear market low. What we're seeing is a bottoming structure already. Could we capitulate a little bit more, but have a bounce back up into these ranges again? Yes, possibly, and that's probably what I'm thinking. I'm holding some cash back on the side. However, I am DCAing aggressively now. I think now is the time to start building up positions again for the next cycle up. I'm only looking at Bitcoin at the moment with a little bit of nibbling into Ethereum, but I think the time for alts is later, and we've seen this play out in cycles before, where you still have Bitcoin outperform the rest of the market before the rest of the market actually comes into alt season. So if you guys have enjoyed this video, definitely smash that like button, subscribe if you haven't already. And again, if you sign up with the link in the description below, you'll get up to $100 USD value in sign up bonuses. So definitely take advantage of that. I'll catch you guys in the next one. Thanks guys.